Across the market in 2025, we have seen healthcare companies getting absolutely destroyed. UnitedHealth Group stock has fallen by almost 40% year to date, while smaller companies like Oscar Health are flat year to date, but from their 52-week highs till today, the stock is down by almost 40%. Another healthcare company that has been getting a lot of attention recently is Molina Health, ticker symbol MOH. They are down 51% over the course of the last year, but from their 52-week high till now, the stock is down closer to 60%. And this isn't just a health insurance issue. This is affecting other companies as well, like Novo Nordisk, whose stock price has fallen by 45% year to date. And while many investors are running away from the healthcare industry, there are a few super investors who are buying into these stocks. The most notable position has been into UnitedHealth Group, with the likes of Warren Buffett and David Tepper building out positions. And even contrarian Michael Burry has not been able to stay away from healthcare companies. He bought into MOH or Molina Healthcare in the most recent quarter, making it 43% of his total portfolio. But let's go ahead and talk about what exactly is going on with the healthcare industry. The first thing that is happening is we are seeing an increase in utilization from insurees. Basically, people, when they go to the hospital, they are spending more money on healthcare than these insurance companies had predicted at the start of the year. That means that they're having to pay out more of their premiums to these insurees to offer coverage than they had expected. So earnings are dropping significantly this year. And the second thing going on with this industry is ACA subsidies. They are set to expire at the end of this year, and what they offer is premium tax credits, which basically reduce monthly payments for insurees on their health insurance premiums, as well as cost sharing reductions. Basically, what this means is when you go to the doctor, you will pay a little bit less out of pocket due to these credits. And like I mentioned, these subsidies are set to expire at the end of 2025, and they are the whole reason that the government shutdown lasted so long. Both parties are going back and forth on what they want to do with these subsidies. Democrats want to just extend them, while Republicans are concerned about fraud. However, recently there's been discussion about extending the subsidies for about 2 years. But the question is, why are these subsidies so important for all of these healthcare companies? Well, these companies are offering different plans on the Affordable Healthcare Act marketplace. And what these plans will end up doing is doubling in cost potentially in 2026 for these insurees. In 2025, the average premiums paid into these plans was around $888. That is expected to increase to $1,904 in 2026. Premiums doubling in 2026 sounds like a good thing for these companies, especially because we have seen their bottom line numbers hit so significantly. However, the concern from investors is around what this could do for member counts for these companies, because back in 2021, these subsidies were introduced, and we can see that during that time period, there were around 12 million ACA members. Since that time period, we have seen members skyrocket, and there are now almost 25 million members in the ACA market. So overall, the thought is that if we see these subsidies go away, we could see people who previously had health insurance elect to get rid of their health insurance, and member counts drop significantly across the marketplace. And this is why we are seeing companies like Oscar fall significantly on the announcement that these subsidies have not been extended, because this company in Oscar is very reliant right now on member growth. In the last year, they have increased their member count by 31%. That is a huge move in the right direction. So if we see this company start losing a significant amount of their members, that could have a big effect on their total revenue as well as potentially on their EPS numbers. And Oscar even called out, kind of in the fine print in their most recent recent earnings announcement that any forward-looking statements are going to be dependent on what happens with the Affordable Health Care Act. But here's the thing with most of these companies. What they have gone through in 2025 has been severe downgrades in terms of their bottom line numbers. For Molina Healthcare, what we recently saw is they dropped their full year guidance for GAAP EPS to $11.90 and adjusted diluted EPS to $14 per share. What this ultimately has done for investors is created a lot of concerns around the profitability of these companies. Even UnitedHealth Group stock fell after earnings, despite them actually increasing their adjusted EPS target for 2025 to $16.25. It wasn't a huge adjustment up. Previously, they were expecting $16 of adjusted EPS. So this isn't, again, a big move in the right direction, but it is a slight increase. The problem is investors are focused on earnings in 2025. In my opinion, in 2026, we are going to see a big turnaround in bottom line numbers for these companies. Here's what I personally think is going to happen in 2026. We see these premiums increase, and that helps offset these utilization costs for a lot of these healthcare companies. What this ultimately does is improves bottom line numbers and reduces medical loss ratios. However, in terms of top line numbers, I do think that this reduction, or at least potential reduction in member count, will occur in 2026. We will see some people drop their medical care. I do not think it is going to be as significant as a lot of analysts are expecting. Health insurance is a very sticky thing. A lot of people get it through their work and they sign up automatically. These people who are signed up through the affordable healthcare marketplace, yes, we may see a slight reduction in this. And ultimately, what I would expect is this will have a small effect on top line numbers for these companies in 2026. So instead of UNH growing their top line by 12 to 15% year over year, I think we could see growth in 2026 closer to 5 to 8%. That seems more reasonable with this dramatic uptick in premiums. But again, this is all assuming that these subsidies do not get approved. If they do end up getting approved, I think that we could see revenue growth much higher. We'll see that 10 to maybe even 15% top line growth for a lot of these companies, and that could lead to a major boost in their stock price. If we do see these subsidies increased, ultimately this is going to have a big effect on these smaller companies like Molina and OSCR. OSCR has previously been growing their top line numbers by 20, 30, 40, and even 70% very recently. So if they are able to continue growing their members, we see this increase in subsidies, and we ultimately see them increase their premiums, helping them achieve or get back to profitability. OSCR Health could have a massive year in 2026 for their stock price. Overall, I haven't talked a whole lot about Novo in this video, but they do play a big factor in all of this. Recently, there was a poll done that showed that GLP-1s are having a big effect on these premiums, thus resulting in these premiums increasing in 2026. So ultimately, a lot of insurance companies are electing to either exclude these GLP-1s from their 2026 plans or increase premiums significantly and include them. And this is really why we have seen this deal between the US government and Novo Nordisk as well as Eli Lilly to lower the prices of these weight loss drugs. Because ultimately, Eli Lilly and Novo Nordisk want to get these drugs into the hands of more people. This market is very underserved, and there's a lot of upside potential by continuing to roll these out to more and more people. But do keep in mind that I own shares of 3 of these companies in my portfolio. I have UnitedHealth Group, I have OSCR, and I do hold shares of Novo Nordisk. The only company that we talked about today that I do not own is Molina. Molina, I think, is an interesting example. I do think they have some upside, but I like OSCR and UnitedHealth Group a little bit more. OSCR is just growing their member count by significant numbers compared to Molina, and I think that could offset some of these issues in 2026, as well as them reaching back to profitability. I think is a big catalyst that could drive a lot of investors into that company. But this is the YouTube portfolio, and right now it is sitting at a value of 82,000, around $500. So again, just to lay out my thesis on these companies, Oscar I think is going to get back to profitability as well as continue increasing their member count, and those will both be big catalysts for this stock in 2026. And I think this could be a $30 company by the end of 2026. For United Health Group, this is mainly a play on them reaching back to profitability and continuing to grow their top line numbers. I think that this stock should be around $450 to maybe even $500 by the end of 2026. For Novo Nordisk, I think this is mainly just an expansion thing. Once they get the hands of their drugs, Wegovy and Ozempic, into more users, that is going to help them increase their revenue and increase their profitability. And ultimately, I think this company by the end of 2026 could be around $85 per share. But again, these are just the opinions of some random guy on YouTube. So make sure to do your own research and buy companies that meet your risk tolerance as well as your time horizon. Thank you guys so much for watching. Let me know which of these companies, if any, do you own? Which ones are you looking to build positions in? And what other healthcare companies have you looked at or do you hold in your portfolio? Thank you guys so much for watching and the continued support on the channel. If you want to see more videos like this one, make sure to subscribe and drop a like down below. Thank you guys again so much for watching and have a wonderful rest of your day.